Obviously, market has been doing whatever it's been doing. We've got this double bottoming pattern forming here, and we're watching the news. We're hearing it everywhere. We're looking at this, and we're starting to wonder, right? You're starting to ask that question: could it be possibly a reversal? And I wanted you to kind of
Hypothetically.
just I wanted you to just kind of, talk to the audience, talk to the people, and talk about a little bit about reversal analysis and specifically where you see this technically, because I have to confess, I like it when you break out the epic pen.
You want me to bring up Epic Pen, huh? It's you are firmly entrenched in reversal analysis right now. But
Uh-huh.
but again, it's like there's stages to it, right? It's like the development of a new real estate thing. You got phase one, phase two,
Mm-hmm.
phase three, and in phase one, you don't know if they're going to get to phase three, quite frankly. Like, for example, if there was a big real estate company saying, we're starting a new development right now, we're going into phase one, and I know the average interest rate is 7%, but we're going to do it. I'm like, you're not going to complete it.
Uh-huh.
You might do it. Like, you might stick a shovel in the ground, but that shovel ain't going to complete the project because there's
Uh-huh.
not going to be the demand there.
Right.
And so you're kind of in that stage of development of reversal analysis. And there's a lot of conversation in the market. Are we, and it's the same debate we have all the time when we see this. And when you read companies like Zero Hedge out there, any upward movement in prices bear action, and any downward movement in prices bear action. According to Zero Hedge, apparently there's no bulls in any capacity. Upward movements of price are short squeezes, downward movements of price are shorts. I saw two articles out of them literally in the same day last week where market went up and they're like, ooh, that's a short squeeze. Literally 12 hours later, market went down. Hedge funds reignited their short positions. And I'm like, no, they didn't. There's not enough time to do what you just said in the
Mm-hmm.
marketplace. That's not what occurred. And so you're really going to see this reversal kind of overall what your bias is. And when your bias is chicken little, the sky's falling and the end of the world is happening, you're certainly going to see this as a continuation pattern with the potential leg down.
Mm-hmm.
Versus if you're looking at this from a glass half full perspective, saying, you know what, I know there's economic headwinds, I know there's difficulty out there, but I also know that there's a market cycle that's about 6 months in front of the economic cycle that's very consistent for the last 120 years in the market. Well, excuse me, I lied, 109 years in the market. Dates
Mm-hmm.
back to the origination of the central bank in the 1913, 1914 range. And so, typically speaking, stock market will bottom before anybody recognizes it from an economic perspective, because the economy will still be going down when the market actually bottoms, because the market's always forward thinking. And the number one thing it's forward thinking in is the central bank. They're trying to project out where the central bank will, one, pause, two, pivot. And I don't think you can officially call a market bottom until you at least get into the pause.
Mm-hmm.
And that, in best case scenario, is coming into 2023. It's not going to happen in the next 2.5 months, as the Fed is still looking at another interest rate increase coming into the November meeting, and maybe hypothetically, perhaps shockingly, they make an announcement in December. But we're still months away from that, Em. And so you're always looking at kind of where the market is leading. And I do think my bias certainly is impacted, but I do think our bias is impacted based on what our overall reading of the economic condition is. Technically, here you're in the middle of what I would consider either a reversal pattern in the W formation variety, or what we would consider a descending triangle, something along the inverted cup and handle range. The
Mm-hmm.
difference is, when you're going through reversal analysis, the first few stages of reversals are the exact same stages of the continuation patterns. And that's where a lot of the debate is centered in. You're starting to see price action that does change that. But the first phase of reversal analysis is slowing momentum. We have that in our current trend. The second stage we want to see is that double bottom. That's where this double bottom comes into place, where support is created right here, and then it confirms right here in this range. And so you have that double bottom. Step 3, if you look at that from a future price action perspective, so you're looking at that type of scenario here. Step 3 is you want to come all the way up to the previous level of resistance. You want to come all the way up to that previous level of resistance and form what you see as a W formation. Now, the W formation is confirmed when you ding resistance. We haven't done that yet. We can't, if the market has another day tomorrow like it had today, we will do that, but you haven't done it yet. And so you need to come back up into that 3,800 level. And then you look and think about it as like an earnings report. You look for that secondary pattern. High base of consolidation at resistance will show you the market is having a defensive posture. It's being able to hold its breath above that water level. That's a positive step. So if you see this type of number coming through, and again, the reason this is so important is because the amount of news that is coming into the market every day during this earnings season is in this type of environment. And so you see it like that, and then you get the breakout of that high base, and that's where you would increase your bias there. Or you look at a little bit of a short-term retracement into 3,700, and then you look for a little bit of that bullish retracement love. And so you're kind of in that middle zone of reversal analysis. And the debate in the market right now is, even from the bears out there, is we'll probably see a bear market rally. Right. That's what a lot of the bears are saying. The bulls are saying, bring on that bear market rally. Name it whatever you want. You call it a bear market rally, so it makes your hearts feel good about it. It doesn't matter. Give us that leg up, because if you have a leg up, you can call it a bear market rally until you can't. And you can as it punches up and up and up. The same way we're looking at crude oil, and we're saying that's a bullish retracement until you can't call it that. Once it breaks support, you can't call it that anymore. And so whether it's a bear market rally, well, that bear market rally could absolutely turn into the historical bottom of the marketplace, depending on what the central bank does within that same time frame. And so call it whatever you want, but that's what we would be looking at, is you would look at it that coming up into resistance, which is the next step in reversal. So you go from slowing momentum to double bottom. And by the way, we got a lot of videos at Tackle Trading on this. We got a lot of write-ups on Tackle Trading about this. I call it the art of the reversal, right? Where you go into step 3, where you come into that double top. Step 4 is the breakout. And the breakout is when you really confirm the reversal, the breakout. And so when you break out of 3,800, because that's where the breakout channel would be, since it is the previous level of resistance, this is where you would confirm the reversal. And so that's what you're looking at right now. You have an improving technical condition, but you do not have a reduction in volatility. Even with the upward movement in price, the VIX hasn't came underneath 30 yet. And so you still have a very volatile condition. You have a lot of news that is driving the market both ways. You're still living in volatility playbook. The overall concern of the market is still absolutely there, but you got to respect the improving condition. You got to respect that. And it's not just bears that are forcing upward movement in price. There's a lot of investors that are seeing this as a bargain hunting from a valuation perspective. You have traders starting to cling on to a little bit of the double bottom type conversation as well. And so we're working through the reversal analysis, and this is absolutely not V-shaped. This is an official double bottom in the market. You got the confirmation of the double bottom just this week. And so you're looking at a little bit of volatility condition. You're firmly entrenched in reversal analysis. And now we just got to see it play out. And as that plays out over the next couple of weeks, you got a lot of important earnings announcements to either aid or to contract that along the way. And if this reversal plays out, it's going to be on the backs of what I have been talking about, quite frankly, for the last 3 weeks, earnings season. That is the next leg. I've been saying it for weeks and weeks and weeks. Anybody that's listened on the halftime report, anybody that's listened on the podcast, earnings season is that catalyst. It is that catalyst that I expect to either see this leg get broken and see another leg down, or if we are going to see a little bit of reversal analysis. And we're starting to see the market behave differently as we're talking about individual stock components than we were when everybody and their dog simply focused on the general market mentality from CPI day, not just recently, but a month ago up until today. So bring on more earnings. There will be some chop. There will be some chop, and there will be some shocks. There will be some shocks, and those shocks can be on the buy and the sell side. I think they're going to even each other out. But I think this is where earnings season really kicks off. Everything so far has been pre-game. Now we get into Netflix. Now we get into Tesla. And then we got just a litany. We got Murderers Row coming at us over the next 2 weeks. So buckle up, guys. It's going to be a volatile ride, but it is an extremely important conversation over the next 2 weeks.